I had thought of devoting this issue more to cover our newly launched quant trading systems than discussing the prospect of the market. But the positive outcome of EU summit and the early noises coming out of Prime Minister's office deserves more than a passing mention. After 31 less than purposeful meetings, the latest EU summit finally exceeded punters' expectations. In the most dramatic move in years, all risk assets perked up at the cost of safe havens. Stocks and commodities jumped. Euro recorded best one-day move against dollar. Commodities surged. In a reversal of mood, German bond yields increased 11 points while Greek bond yield fell 45 points. What has changed? Instead of bailouts being routed through sovereign balance sheets, funds will now be directly injected into weak banks. In return, bank supervision across EU will now vest in one central authority to be in place by November. Austerity conditions and supervision for bailed out nations have been relaxed. Lastly, bailout lending will not rank superior to other market debt. Does this change the ground reality? It does, but only to the extent that the possibility of a disorderly disintegration has been replaced by the prospect of prolonged period low growth, austere EU. After the exit of Pranab Mukherjee, who is being indirectly blamed for all the ills, the market can get a fresh start. Technically, Nifty's long candlestick breakout on Friday promises a fresh move. Any positive news on the policy front or improvement in economic fundamentals can act as catalyst. But the formidable hurdles of record trade deficit, declining foreign exchange reserves, deficit rainfall, and recalcitrant bureaucracy remain. Market believes Dr. Singh is capable of reproducing the magic of 1991. But has anyone seen Mr. Narasimha Rao around? FII buying of rupees 3,000 crores on Friday is reminiscent of their onslaught back in January. The market will likely rise next week and thereafter until the earnings season gets underway. But frankly, the most significant event last week for us in percentage play was the launch of our quant trading systems. More than a year in the making, quant trading systems is the outcome of percentage play research focused on helping traders find a way to navigate different market conditions. Statistically validated, the algorithms are essentially founded on four broad principles. 1. Either the number of winning trades should be significantly larger than the losing trades, such that the portfolio built on algorithms should provide stable returns over time. Or 2. If the number of wins is near the number of losses, the average win per trade should be much larger than the average loss per trade, thereby producing outsized returns over time. 3. The drawdown should be under 20%. And finally, 4. The system should be sensitive to trends and reversals such that the exits can be designed to best protect the capital. In line with these principles, we have put two quant trading systems in the public domain, Rapid Fire and Power Swing quant trading system. Rapid Fire, as the name suggests, is a fast-moving system designed for the aggressive traders who are quick on the draw and like to be in the market all the time. We typically take entries in the last half hour with systemic exit points for the following day unless targets are reached before close. In the last 1 month, the Rapid Fire has notched up an impressive record of 73% winning trades and 67% profitable days. Power Swing, on the other hand, is for the discerning who's patient and willing to wait for the right opportunity when the odds are in favor. Built to let profits run while taking losses early, Power Swing is a complete contrast to Rapid Fire. In the 5 weeks since we started tracking the system, Power Swing notched up a formidable return of 33% in the first 12 days, following which it gradually moderated to 25%. We do believe that quant trading systems by nature will not produce winners every day or every time, but we remain confident that these will generate healthy returns if these are consistently followed for a while. Well, if Rapid Fire or Power Swing doesn't get you fired up, hold your breath. Percentage Play is shortly about to introduce a quant trading system solely for trading Nifty. Watch this space. Quant Pair Fund last week notched up its usual 3 wins. Given the prevailing uncertainty in the market, we have been keeping the allocations low. We are currently running 4 pairs, which hopefully should close next week. Going into the results season, Quant Pair Fund will see fewer calls next month as we protect the fund from event risk. In Competitive Value Fund, we were inactive for fear of getting whipsawed in a directionless market. With the turn of sentiments on Friday, we are now inclined to reduce the cash holding and enter into swing trades from next week. However, unless quick follow-up action is forthcoming on the policy front, the animal spirits in evidence on Friday may just as easily collapse under the weight of declining growth and disappointing Q1 earnings. Percentage play, therefore, is still not betting on a secular uptrend and would like not to increase core allocations significantly.